Thursday 16th of July, morning markup. On the daily, we're bearish. Broken structure here. If you wanted to define that structure, pulled into the premium, and then broke a structure to the downside again. So solidly bearish on the daily. 4 hour, clearly bearish. Breaking structure. High, low, high, breaking structure. Now we're pulling back on the 4 hour into this premium zone. I mark out the 50 and the 80%, and I like to call it the kill zone. That's like my preferred area of where I like to look for a trend continuation, because what I've found is through my own trading, and it's not a hard rule, it's just a visual thing that I like to see, and it's a cue that when price comes out of this box to the upside, the momentum's possibly moving in the opposite direction. So rather than waiting to take a high out, when price pulls up and moves into this area and comes out of the box, then I'm a little bit more skeptical about getting shorts depending what's happening to the charts left. So for example, if we just took out a low hit, like a major low to the left here, and then price had started to push, work its way up into this area, I'm going to be a little bit skeptical of taking longer term shorts. So I might take a short just to the 50% with the expectation of it then continuing higher, just because it's left to the top side of this box. Found that happens quite a lot, especially if there's something to the left that's quite significant. But then sometimes it just doesn't matter at all. Sometimes I'll manage to get a short, because it's a short still valid here, because we're bearish, there's no bullish confirmation. I'll get a profit will be took on the 50%, and then price will just continue down, and I'll miss out on a lot of profit. The way I like to do it, so that answers the rectangle boxes that are the premium and discount boxes that are covering only the 80% rather than the full top half of the range. So anyway, we pulled into the premium, tagged it there, and started to range and reject. This week's been interesting because we've had two inflation datas, CPI and PPI, have come out weak. So that's bearish for the dollar and bullish Euro USD, because Euro is the base pair. But the Fed is pushing back, saying the job's not over, and still want to do rate hikes later in the year, so that's bullish. So there's a bit of a conflict on the fundamentals. But then there's an FOMC next week, I think, which will give us a solid direction, because that's really the be all, and that's like the main decision. So my thinking is, even with the weak inflation data, the Fed's got the ultimate say, and the war in Iran's back on, which is quite inflationary as far as energy and fuel, because of the Strait of Hormuz and all that. What war tends to do, it tends to put prices of everything up. So I don't think, complete guess, speculation, I don't think we're going to continue on, like have a complete trend shift. Now the 1 hour, so obviously we have just chopped, and we took a nice range trade here. So we've got a range trade in there. So we're just chopping about, took out low, took out this little minor high, took out low, took out this high, pushed down. We've got a nice trade short yesterday, and then we've obviously pushed up because of this weak inflation data. But we still, on this 4 hour swing leg, we're still just tagging this premium area, and there's a lot of resistance coming in here. So I'm not convinced that we're gonna rock it out because of the war, because of the ceasefire being over, and because of the Fed's stance on interest rates. I think price is just gonna chop around or even continue down. I'm not sure. That depends whether it's been priced, well, it's the fun of trading. You can have as many great ideas as you want, but if you don't know, nobody knows. I'm sure somebody will, but I don't. Anyway, 1 hour ranging, just broke out of the range to the upside. And this morning, I'm still short biased because of what I just said. I'm gonna look for a sweep, my entry model, and a short trade. Now, this in particular will be, I'm gonna treat it as another scalp, So I'm not going to target, to be fair, in this area where we are now, if there wasn't weird inflationary data or weak inflationary data, I would be targeting these lows to the left and taking quite a big trade over a couple of days. But given the fact that I have no idea and we've got conflicting information, I'm not gonna hold it that long. I'm gonna take my 3R and just take the session trade. Let's have a look on the 5. So New York's pushed up, Asia's just ranged sideways. We're in premium. We've got no bullish shift yet, I don't think. We have closed above that last high, but it's still a range. It's still choppy. So I'm not gonna, another reason why it's gonna be a range trade. A range trade rather than a reversal trade. So I'm gonna want to see that sweep, a break of structure, and then a short-term trade covering the high, targeting a 3R. That's what I want to see today for me to get in a trade. Whether that'll happen or not, to be fair, there's a good chance. There's a good chance that won't happen. There's a good chance that price will just rocket, given the weak inflation data. But who knows? Let's see what happens. If I see a take of these highs to the left and then my entry model come up, I'm going to get short. I'm going to target 3R. That's the morning markup. We'll see what happens.